What's going on, guys? I want to highlight a little bit of a strategy entry that I use in my system for trading options. Now, this is going to work for, futures. It's going to work for crypto. It's going to work for Forex. It's going to work for equities. Doesn't really matter the instrument that you're trading. Commodities, oil, gold, doesn't matter. A stock chart is a stock chart. As long as we've got candlesticks, as long as we've got some areas for supply and demand, we can definitely make some money. So let's go ahead and make 2024 one of the best trading years that we have all had. I plan on releasing a lot more content, getting more in depth, going into the psychology, the emotions, and, the nitty gritty technicals that are actually going to help you make money and stay clear of, areas in the market where you shouldn't necessarily be trading, right? That's what I try to focus on at Evolution Traders. So we're looking at Amazon. I trade quite often. I also trade Nvidia. I trade Tesla. Those would be like my main stocks that I look for to trade. I'm also going to throw in Microsoft, and I will throw in Apple and Meta as well. But one thing that this kind of particular entry strategy is going to force you to do is it's going to force you to sit the first 30 minutes of the market. How many times have you personally taken a trade off the open and the trade has trapped you and you've lost money? Either you panicked and you sold too early only to see the move continue in your favor, or it just didn't really work out, right? It's happened to all of us, but I've really learned over the years, and I've been trading for 9 years now. I've really learned over the years that kind of sitting out that first 30 minutes of the market, letting the market really digest, can give you a better flow and a better feel of where price action is going. So if we look at Amazon off the bell, it does lose the pre-market lows and immediately puts in a new low and then snaps back. It's in this particular time that a lot of traders will get in through pre-market lows, get trapped, and begin to get worried and concerned, and then sell out of their position only to look back at the end of the day and see that we put in lows at 151. How I like to look at the market is I want to see the market digest. So I want to see the first hour candle close, which is going to be the first 30 minutes of after the market opens. What I'm then going to do is see, where did that initial first move go? Did it go down, or did it go higher? If it went down, how much room do I have in that trade if it does confirm? The same thing if it goes, to the top side. How much room do I have if we confirm the highs? Now, if you notice, this trade immediately puts in this low and then immediately snaps back up here into supply. And I've got a supply zone here at the linear regression. Now, one thing that I want to tell you is that I would not want to take a long position here on a confirmation at supply. But if you notice the opening 5-minute candle, we lost demand and we have nothing, right? There's nothing here all the way down until about 152. So if we look at the initial lows that we put in at 152.64 down to 152, you're looking at around 64 cents worth of room. And if you kind of look at the ATR, which I don't know if you guys can see it on the screen because it's kind of blocked off on the right hand side, but the ATR, which is average true range of a 5-minute candlestick here on Amazon, is around 44 cents. So if I can manage to pick up 40 cents, 50 cents, 60 cents, that's a hell of a move, right? So size yourself accordingly. That way you can take 40, 50, 60 cents out of the market and make good money. Now, sometimes they go, $1, sometimes it goes $2. But what I'm telling you is that if you focus on taking that initial set of profits at that initial 5-minute ATR and then holding a runner as long as the trade is still working in your favor, you're going to be able to stack those gains. So if you notice here at 7:45 in the morning, which is about an hour and 15 minutes after the market opened, we do confirm these first hour lows. Now, again, it does pull back, but I want you guys to notice something here. It pulls back into supply, which is a declining 5-day moving average. We have a declining 10-day moving average. We have a declining 20-day moving average. So all of these areas are going to act as levels of resistance. As long as we don't start closing over the 5 or closing over the 10 or over the 20, I'm going to remain in this trade. If we did close over the 5, 10, or 20-day moving average, you can pick one and use it as your exit. Now, which one do you pick is all going to depend on the amount of contracts that you're playing and the level of risk that you want to put on the table. Typically for me, I'm going to use the 10 and the 20-day is my max pain. So if we close over the 10-day moving average, I'm kind of getting very, very cautious and getting ready to exit the position for a loss. I'll use the 20-day moving average because sometimes candles, close very quickly and they move and they snap, in the blink of an eye. The 20-day moving average, any close over that is my max pain stop loss. So I position myself accordingly. If I get into this trade somewhere down here at around 152.64, if I do lose the 10-day moving average, it's 153.60. So I'm going to lose, 50, 60 cents off the trade. And if I let it close over the 20-day moving average, I might lose close to $1. Again, when I was taught to trade stocks and taught to trade options, you got to give these high beta stocks, these tech stocks, 75 cents, $1 worth of room. Think about if you were playing 100 shares and you lost $1 on 100 shares, you're only losing $100. So think about your risk in that kind of sense. I play options, so my risk is going to be a little bit different. Obviously, if I lose $1, it's going to be a lot more than $100, depending on how many contracts I'm playing. But of course, if I'm playing one contract, you're going to be in the ballpark, $40, $50, $60 loss. It is what it is. It all depends on your account size. So again, its risk is all relative to how much size you're playing based on your account size. If someone's playing with a $500 account and they're playing one contract, then sure, you're going to want to take the $40, $50 hit. If someone has a $100,000 account and they're playing 10 contracts, what's $200, $300, $400 loss when you have $100,000 in your account and able to take more trades? So again, keep that in mind, because of the fact that when you're taking these trades, you want to know where potentially you can get out and where potentially you can make money. So when you get into this trade, as long as we are staying below the 5 and 10-day moving average, you want to make sure that you're taking profits into the next area of demand. So if we lose one particular area of demand, look to the next area of demand to take profits. So your initial profit taking zone will be around 152. And then what you're going to do is sell half size and hold a runner. Now, how long do you hold this runner? Until we close back over the 5-day moving average. So if you don't take profits here, 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 then you're going to get stopped out here at 8:45 a.m. Pacific Standard Time, because we closed back over the 5 and the price was 151.50. So from an entry price of 152.64 to a closeout price of 151.50, you took about $1 off of your runners. Again, you made your initial money here, you held your runners, and then you made your initial money on your runners here. So again, wait for the first 30 minutes to digest. After the first 30 minutes, see if you have room. If these opening hour candles get confirmed, how much room is in the trade, how much size do you want to put on the table, and then let the trade go, let the trade ride. Hope this video helps you guys. If you guys want to trade with me and use these particular strategies each and every single day when I'm trading live with me and the rest of the team, join Evolution Traders. That link is down in the description box, and I'll see all of you guys on the next video.